Yeah, good morning, everyone. So yesterday we saw some more corrections in the US market. So US market post employment data has corrected on Friday and yesterday also. The employment data was indicating that the economy is still strong and Fed will take some time to uh, stabilize the rate, or it may have some more increase in the interest rates. So post that, US market got corrected. Apart from that, if we see the futures are minor positive, and even Asian markets are indicating some positive trend in today's trade. Most of the Asian markets are up marginally. Hong Kong is up higher, driven by tech stock in the Hong Kong. Apart from that, oil which has corrected earlier in the last week, has shown some bounce back yesterday. Is up by around $1.5. And apart from that, apart from the oil, iron ore is more of a flattish, and steel is also marginally down in China. So overall seems more of a sideway to marginal positive market. We had corrected in last few days in Indian market, so may see some support or maybe some bounce back in today's trade. Now I'll request technical team to take up from here.
Yes, thank you, sir. Good morning, all of you. This is Swati. Today, the market is likely to open with a gap up opening, and we are likely to witness some positive move during the day. Yesterday, we have seen that the Nifty has respected the support of 17,700 levels on the closing basis, which gives some sort of a relief sign. Going ahead, this pullback rally is likely to be continued as long as Nifty sustains above 17,700 level. Now, on the higher side, as of now, Nifty may face a support resistance at around 17,840. Any more about that level, we expect the rally to be continued towards 17,900 to 18,000 levels on the higher side. Whereas on the downside, as I said, 17,700 will be the crucial support level. If it's break that level, then 17,600, 17,540 levels gets open on the Nifty on the low side. So the view is little bit cautious, but definitely pullbacks rally is likely to be witnessed into the market. Coming towards the Bank Nifty, Bank Nifty yesterday, it was just a sideways momentum we have seen into the Bank Nifty. No major rise or fall we have witnessed. For today intraday purpose, the resistance is placed at 41,780. Any move above that level, we expect the rally to be continued towards 42,000 levels on the high side. Whereas on the downside, the immediate support is placed at 41,320 and 41,140 levels. Coming towards the Nifty Finance, 18,580, 18,690 are the resistance level we need to keep eye on it. On the flip side, 18,380, 18,290 are the support levels we need to keep eye on it. The overall view will remain a cautious, but pullback rallies cannot be denied after this sort of a corrections as long as Nifty and the Bank Nifty respects their mentioned support levels. Stock specific on the technical front, IEX really looks very good because we have this particular year we have witnessed a continuous fall in this particular stock from almost 250 levels towards to 130 levels. Now the weekly chart indicates that this on the technical front it shows the positive divergence. which indicates that we are likely to witness a pullback rally from the oversold zone, and which this pullback rally is likely to be continued on the upside towards minimum 155 to 160 level. So one can take a long position at the current market price, which is trading at around 139 levels. Maintain the strict stop loss of a 134 and trade this particular counter for the pullback rally up to 155 to 160 levels. So that's it from my end. I request Nirav to take a call forward.
Yeah, thank you, Swati. See, on the derivative front, nothing much has changed. Data is the same. VIX continues to remain below the 15 levels, and the open interest is low while PCR is at comfortable level. So all in all, we can still witness this range bound action, and with a positive bias. Once 18,000 is crossed above, you will see some buying coming in Nifty, which can take Nifty towards the 18,250 to 18,300 levels, but 18,000 needs to be crossed. We can probably retest this level going forward. Good support areas placed around 17,800 and 17,600 levels, so that should be the lower end support area for the time being. From the stock specific front, we are seeing, most of the stocks are actually doing, one day they'll do well and next day they'll come down. So no real move that is coming in, or you are seeing a trend in these stocks. So at this point of time, doing intraday or 1 or 2 days trade is better. And the finance sector as of now looks good. L&T Finance, M&M Finance looks good. So look out for the same. They can probably do well going forward. Yeah, that's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. Muthoot Finance result was similar to that of Manappuram that we discussed last week. Result is below expectation. Loan growth was flattish sequentially and 6% year on year, driven entirely by increase in gold prices. If we see the tonnage of gold that is with the company as collateral, it is down 1% both sequentially and year on year. Yields and spreads have bottomed out. Yields were at 18% this quarter compared to 17% in September quarter and 21% last year. Asset quality has deteriorated. GNPA increased from 1.7% to 2.6%. So we are neutral on Muthoot Finance. Although if we see gold prices have rallied in last 3 months from 50,000 levels to 57,000 almost. And if it were to continue to rally and cross 60,000, then naturally the loan growth will start looking very high on a year-on-year basis and even sequentially. So that might attract some interest in the stock going forward if the gold prices continue to rise. LIC Housing Finance result is below expectation because of higher credit cost. Credit cost came at 1.2% versus a normal run rate of 0.5% in last few quarters. So this is not good for the stock, and we are neutral on LIC Housing Finance. Thank you.
Indocount Industries has posted decline set of numbers for the quarter. Revenue declined by 22% QOQ, and EBITDA margins came in at 11.1% versus QOQ of 14.1%. This led to lower PAT as well, which came in at around 38 crores versus QOQ of 67 crores. Stock is trading at 7.3 times FY24 EPS. Thank you.
Yeah, good morning. Tata Steel result was below expectations. Volume were lower at 7.15 million ton versus 7.3 million ton of expectation. Realizations were also lower, along with EBITDA per ton at rupees 5,661 versus expectation of 8,163, mainly due to margin compression in its Europe business. On a standalone basis, EBITDA realizations were in line with expectation. EBITDA per ton stood at 11,241 versus expectation of 13,296. For its Europe business, company faced an inventory loss of 55 million pound. Realizations were also lower along with elevated cost, which resulted into a negative EBITDA per ton of rupees 7,810 versus positive of 9,540 sequentially. The consolidated net debt stood at rupees 71,706 crores. So this is negative for the company. Nuvoco Vista's result was below expectations. Volume stood at 4.5 million ton versus expectation of 4.6 million ton. Realizations were in line with expectation at 5,788. EBITDA per ton was lower at 596 on account of higher power and fuel cost and higher freight cost due to a railway surcharge during the quarter. The stock is trading at EV by EBITDA of 9 times FY24 EBITDA. Novelis, which is Hindalco's subsidiary, its result was declining mainly due to lower shipments of beverage packaging destocking and a weak macro scenario. EBITDA per ton stood at 376 versus 514 sequentially. It was affected by lower volumes and higher operating cost and negative forex impact of $18 million. So this is negative for Hindalco. Thank you.
Yeah. Apart from this, Automotive Excel, which has reported result earlier, had a call yesterday, and the result was very good, and the stock had seen some movement. We had recommended this stock earlier, around 5-6 months back, and has performed very well. Now at current price of around 25.92, it seems fairly priced based on FY24 earning, which is at around 20 times FY24 earnings. Though the industry outlook continue to remain positive, it is serving to CV demand, and CV demand continue to remain on an uptrend. This year and again next year also, the demand is likely to show some positive trend. What is management has indicated in the call is that after this excellent performance in Q3, Q4 will be more of a similar of Q3. Management is a bit cautious about Q4, considering that the demand in the FY23 has come very strong. So FY24 may not be able to show very strong growth on the higher base, but still it will be showing high single digit to maybe double digit growth in volume for the industry. But apart from that, what we see that there is a scope for margin expansion, and Automotive Excel has consistently outperformed the industry. As such, can still do better in the next year. And also, the valuations are though reasonable at current point of time at around 20 times. But considering that new management of Cummins, which is likely to take over in the coming year, we may have some strong plan going forward for the company. And also this CV industry is still likely to do better and is still lower than the peak of FY18, when the CV industry had hit all-time high. Currently also the number of CV sales is lower than that. So there is a scope for improvement in the next year as well. So continue to remain positive, but valuations are a bit restrictive. So hold on is the current strategy. Any good correction can be used to buy the stock. Apart from that, Huhtamaki has come up with a number. The numbers has turned positive after a long time. Company is into packaging business, wherein it is in flexible packaging serving to most of the FMCG. Company was suffering mainly on account of high level of raw material cost, which they were not able to pass it on to the customers in last 5-6 quarters. But looking at the raw material cost, which has corrected substantially in the recent past, the margins has also shown some recovery in this quarter. Uh, Company has reported EBITDA margin of around 7.1% against last quarter 3% and last year 1.6%. So company has turned positive. So outlook seems positive from here for Huhtamaki. There are few development which is there in the Huhtamaki is that their MD has changed, and now ITC packaging division person has come as an new MD for the company. And also apart from that, the turnaround of the company, the company is also looking to sell one of their land in the Thana region, which can generate a good amount of cash for the company. So these are additional positive for the company. So outlook we feel is a positive for Huhtamaki India Limited. Anyone else has something to speak, or we can, Harshal can take it over.
Yes, thank you, sir. Good morning, everyone. We might witness gold and silver some pullback. So, for a trading purpose, one can buy gold around 57,000 and maintain a stop loss of 56,800. On higher end, however, 57, 200, 300 seems to be a resistance area, and could witness some selling pressure from there. So on selling, one can maintain a stop loss of 57,500. In silver, we may witness a pullback till 68,000, 68,200, and then again we can test the support area of 67,400 to 300 area. Crude oil prices have opened gapped up, so overall looks positive. Buying on dips is recommended. One can buy around 6150, and prices are expected to test 6300. So one can maintain a stop loss of 6080. Natural gas prices are consolidating. However, we expect some pullback till 220 to 25. So buying with the stop loss of 295 is recommended. And copper, feel the pullback can test till 776.78, and then again selling pressure could be witnessed. So overall, for a trading purpose, one can buy around 769 and maintain a stop loss of 765, and again sell on 778 and maintain a stop loss of 783. In zinc, yesterday we saw a massive fall, and that could continue. So selling around 280 is recommended with a stop loss of 282, and on downside 277 to 75 is expected. Aluminum, for a pullback, one can buy with a stop loss of 220, and we recommend to take profit around 224. So it could be in a range from 224 to 220. Yeah, and that's it from me. I'll ask Riya to take over from here.
Thank you. So, good morning, everyone. So, on the currency front, we are seeing quite a weakness into the USD INR. It has tested the level of 82.87 on the higher side. In today's session, it has opened with a gap down, indicating some profit taking happening. However, our view remains same of going long into the pair from the lows. So it could test 82.67, 82.65 in the intraday session, and you can go long from those levels toward the target of 83, 83.20. JPY INR, the pressure will continue in the pair. If it breaches 82.68, it could test the level 62.68. It could test the levels of 62.40, 62.20 in today's session itself. Euro INR also, the weakness has continued in today's session, where it has opened with a gap down at around 88.94. 88.82 will remain as a very strong support. If it breaches that, then the bearish leg will continue towards 88.53. So you can go short below this level with an SL at around 89.20. For the GBP INR, I think it will be a consolidation session within the level of 99.80, 99.50, and the pair will consolidate within these ranges. That's all on the currency front. Thank you.